Welcome to this class, the audit class. Today we want to look back at the issue of audit evidence. Okay, and just a brief introduction as we, prepare our minds for question practice. It is very important to appreciate that audit evidence holds a very special place in the audit process. So without evidence, I would like to mention that it is reckless for an auditor to go ahead and give a particular opinion. So audit evidence is basically all the information, as I mentioned earlier on, all the information that the auditor uses in arriving at their conclusion. And of course, when we say conclusion, we are referring to their opinion. So your opinion is going to be determined by the audit evidence that has been gathered. Your opinion is supposed to be in line or indeed conform to the type of evidence that you have been able to gather. So now we do have these words that we use, and I think that they are used also in investigation activities elsewhere apart from accounting. So if you are going to bring evidence that is going to be admitted, that evidence must be sufficient. That is in terms of quantity. It must be persuasive. That the quantity deserves attention, the quantity of the evidence that you have been able to gather. And then next, the evidence must be appropriate. So here we are referring to the quality of the evidence that you have gathered. Okay, so there are some drivers of what is known as quality of audit evidence, and these you might be asked a question in the exams to elaborate more or to shed more light. So number one, it is agreed within the audit circles that external evidence is more reliable than internal evidence. Does that make sense? Does that make sense?
Yes.
It is argued that internal evidence might be tampered
Yes.
with by the auditee, in this case the client, and to be more specific, the senior managers of your client. It is also argued that audit evidence collected by the auditor is much more better than one that is given to the auditor. That can come in form of management representation and so on and so forth. It is also argued that entity evidence can only be given the due consideration when the internal controls are strong or effective. So if you're going to rely on internally generated audit evidence, then you must have judged the internal controls to be strong or effective. It is also said that written evidence is much more better than oral evidence. So documented evidence forms strong corroboration, of course. I think oral evidence can just be used for corroboration, but not very strong, of course. And then original evidence, so it is better to use original documents rather than photocopies when you are getting documented evidence. Okay, so that is or those are some of the issues that you'd like to um, appreciate as we get on into this discussion of audit evidence. Now, I know that I've shared these notes with you guys, so allow me to just you know touch a little bit on this word, this phrase of audit what? Assertions. So an assertion is basically a claim, right? I wanted to say this, that when you are provided with the subject matter, and in this case we are talking about the financial statements of your client, those financial statements contain the assertions or the claims of management. It is your responsibility as the auditor in charge to verify, to interrogate those assertions. Are you hearing what I'm saying? Okay, I hope you are getting what I'm saying. It is your responsibility to know that what you have been provided with in terms of the draft financial statements is something that is subject to change. It is not, cast in concrete, something that is cast in concrete. The information you've been provided, if you are provided with a draft trial balance, that draft trial balance must be further interrogated because it contains the assertions or the claims of management. And in this case, we are saying management is an interested party. You remember that, eh? I hope you remember. Are you still there?
Yes.
All right, guys. So I think I've made an introduction because very soon we are going to look at this word assertion in light of different items that are found on the balance sheet, and it'll be nice, I think, to then appreciate how to answer our question. So let us go to question number 5. I hope you have this. I think you should have this. So I was thinking that this is December, but I think this is March. So question number 5 from the March sitting, our students are saying we had a problem with audit procedures, and immediately you mention audit procedure, you are talking about an action that you would take in order to get evidence, I hope that you're understanding that. So now the overview of the question, perhaps we can look at that. So our question looks at substantive procedures on items that are going to be read. Then we have got audit procedures on receivables. Then we have got audit procedures on loan. A loan is a liability, right? Then we've got audit procedures on inventory. Then the place of negative confirmation in terms of customer. Okay, negative, receivable. Can I say here? Receivable confirmation. So there's positive and negative. If there's a negative, there is a positive. So we're going to start with the first question, which is question number 5A. And question number 5A says what? Let's check it out. It says describe. Just about 5 marks, right? Describe substantive procedure for each of the 5 transactions initiated by the newly recruited accountant. Are you able to see that? I'm sure you're able to see that.
Yes.
So I think I had a challenge with this. I need to just modify it a bit. I like to to use certain, fonts. I like to use certain fonts, so let's modify that. You can see what is going on here. Describe one substantive audit procedure for each of the 5 transactions initiated. So one, and the examiner was quite specific. So we are going to answer this together. So let's read. Okay. This new accountant, according to the question, has got no experience in this market. So we're told Binat Limited is a manufacturer of agrochemicals. The previous accountant resigned, and a new accountant was employed who has no knowledge of the type of accounting software and system and the industry in which BT Limited is operating. He previously worked for the Human Rights Commission. The following transaction has been entered in the books of accounts by the new accountant. Number 1, the accountant has recorded the purchase of a delivery van costing 13 million. What audit procedure, what substantive procedure rather, can you do here? Okay, so we can start answering here so that we do not take too much time. So they said 1, isn't it? Yes, they said 1. So if they said 1, we can at least think of 1 procedure on non-current assets. Okay, are we together? So I would like to suggest we recalculate. This is just 1. You can think of other things. Recalculate the cost of the vehicle. What are you trying to achieve here? Which assertion? Accuracy, right?
Accuracy, yes.
Yes. I hope that you understand that. So you can think about that. I think apart from accuracy, you can compare what is on the invoice or what is on the source documents and what has been recorded in the books of accounts or in the general ledger. What will you be checking for there? Completeness. Are we together? You can also check, the cutoff. When was the vehicle purchased and in which year was it registered? Think about depreciation. Again, falling under accuracy, was the correct depreciation calculated? Was it prorated if the vehicle was bought in the middle of the year? So all those things. But the examiner was asking for 1. Number 2, we have got a transaction relating to the issue of training. We are told during the year the company spent about 25,000 on training employees in the use of new chemicals that can destroy crops. It is believed that employees are trained in the use of a particular pesticide. They will guide farmers who come to buy agrochemicals from BT. The related training costs have been capitalized. So what substantive procedure rather, okay, can you do here to obtain evidence? So I would like to suggest this. Check if training costs were expensed in the SPL. Of course, I think the assertion that we are looking at here is what? Classification. Are we together? And depending on company policy, this training costs is supposed to be put under the correct expense heading. If you have got a question, you can ask. There is an aspect of also you checking whether part of this training costs could have been capitalized. Um, the standard IS 38 prohibits the capitalization of training costs because it is argued that training costs are a normal business expense. Are you getting what I'm saying?
Yes.
Yes. So you can check for that, and still you can verify. Ask for a schedule for the people who went for training to find out if what was recorded is correct. Ask for a schedule and the cost. Ask for the trainer's invoice. You want to ensure that the figure that has been posted, 25 million, is the correct amount that should have been posted. Okay, please remember that. Then number 3, we are told BT Limited spent large amount of money in rehabilitating its factory amounting to 28.5 million obtained through a loan from the Zambian Farmers Credit Bank. The amount was recorded as a non-current liability in the financial statements. It is expected that the levels of production will increase and that the company will be able to export agrochemicals to the entire southern African region. So once again, what substantive procedure are you going to do? So this is likely to be a compound figure. What this means is part of the amounts inside here would go to revenue expenditure, and part of the amounts inside this figure, would go to capital expenditure. I hope you are getting that. So let me just close this. Check or scrutinize.
Sorry, sir, I can't see your
Oh, you can't
screen.
see, so but you can okay, don't worry about this. If you're able to hear what I'm saying, then you can still write. But I'm going to try to share the video with you.
All right.
So, but please, you should be jotting down something. You should be writing something. It's very important to write. So scrutinize the amount spent on refurbishments, right? Refurbishments um, to to and confirm, okay? And confirm separation of capital from what? Revenue expenditure, because not all expenses under this project qualified to be capital expenditure. Refurbishment, not expenses, not all expenses qualified. Okay, so it'll be very important for you to follow up. How much went to, capital expenditure? Then now, this is a loan, so you can also undertake some work to verify the treatment of the loan. Okay, in terms of how the loan is classified, I think we are going to appreciate the fact that when you get a loan, there is a portion that falls due within 12 months and a portion that falls due for more than 12 months. So remember that. Okay. Then what else can you do? So we go to the next um, to the next transaction. We are told that BT Limited acquired a new office building at a cost of 70 million. What substantive procedure can you do there? So in this case, you can do an inspection of the building to confirm existence. Is that correct? Inspect the building. Are we together, guys?
Yes.
To confirm what? Existence. And then I think also you have an additional one. You can review, excuse me, you can review the title of the building to confirm. What are you confirming here? Rights and what?
Rights and obligations.
Yes, rights and obligations. Okay, rights and obligations. Very good. Yes. All right. Are we together, guys? And but of course, you don't have to write these things in the exams. All right. I'm just justifying why. You don't have to write rights and obligations. If you can't remember the assertion, please don't write it. Did you hear what I said? If you can't remember the assertion, don't write it, as long as your submission makes sense. Then the next one is what happened next? There was during the year
Yes.
a disposal of a piece of equipment which was found to be of no use, 30 million. A deposit of 8 million was received at the end of the year. The amount of depreciation was calculated as 15 million. So there you have got a number of things that you can do. Yes. You can recalculate the depreciation. You understand that? What assertion? Accuracy, right? Do you agree with that? Accuracy.
Yeah.
You can compare receipt. Compare proceeds. Received to cash book entry. What are you trying to check for here? Completeness, right? Completeness.
Yes.
Excuse me. So you can do those things. Then you can also check that this asset was properly removed from the asset register. You can also recompute, profit or loss on disposal to check the accuracy of the reported profit or loss in the statement of profit or loss. I hope that helps us. So we have done about 6 or so points, but I think we have mentioned more than this. We can proceed to the next question, which is question 5, question 5b. All right. Question 5b, what does it say? It says suggest 4 procedures to be performed on receivables. Can you see this? Yes. 4 procedures to be performed on receivables. So I guess I'll take the other one to the next part. But 4 procedures to be performed on receivables. So let's begin to answer. Now we need to go to the stem very soon. Excuse me. So what does the stem show us? Let's go to the stem, to the information. We are told that BT extended credit to its customers. The credit policy has been working well with a few exceptions, and most of the receivables are confirmed on time. This is due to the fact that the internal controls are functioning effectively and efficiently. So in order to maintain updated inventory records, the company decided to use perpetual inventory count of stock tech. So the question on receivables is coming from this section. So we need to respond, and basically it's not to scare you, it's more theoretical. It's just that at this stage of your studies, students find it a bit difficult to remember the procedures, and that's the reason why you had mentioned that. So once again, let us go to receivables and do the procedures so you can compare. And of course, if you've been working in the accounts department, you can compare list of individual balances for your customers to the general ledger control account balance. Okay, please, you can compare the total, of list of balances of list of customer. These are individual accounts for customers. Customer balances to the GL control, or we can call this the receivable control account. Do we agree? To the receivable. I don't want to overstay here, but if you've got a question, you can ask. Do you have a question? And then next, you need to compare sample for a sample or a number of receivables, right? For a sample of customers, for your clients, perform confirmations or secularization. Call them and find out if indeed they owe your clients certain amounts of money or specific balances. Okay, please remember that. And the next thing is you can still do some recalculations for the recalculate the or cast, to cast, to total up, to sum up, recalculate the receivable total balance. Again, we are checking for accuracy there. Okay, they said 4, isn't it? Yeah. And you can review again. You can redo the calculations on the allowance for receivables. This is likely to be understated so that receivables and profits can be high, but you can counter check. So you were asked to do 4. All right. I was also thinking that you can review the post-year and receipts from your receivables, just to have an idea on, non-performing receivables. There's what we call non-performing receivables. I think in the banks it's emphasized because some receivables are supposed to be written off. So there you are. Any questions on what we have discussed? Hello? Yes? Questions? Hello guys, do you have any questions?
No questions from my end.
All right, thank you. So
No
we go
question.
to the next question. Are you ready to write your exams? It's a fair question. Are you ready to write your exams in June?
We will be ready.
Will you be ready? You need to start practicing questions on your own, all right? It's very important.
Yeah.
So we go to the next one, which is this is what? D1, isn't it? And I'll be done very soon. So this one now talks about stock. Okay? Talks about what, guys? Stock. It says what? Have I skipped something? I think I was supposed to do something which I've skipped, isn't it? Hello guys, haven't I skipped something? Why do I have a feeling that I've skipped something? It's the loan, isn't it?
Yes, for the loan.
Yes, we're supposed to do the loan issue. So, any ideas, guys? I want you to give me some ideas. What procedures can you perform on the loan?
Loan.
To confirm, verify that figure for the loan, what procedures can you perform?
Is it okay to also check through the loan agreement?
Yes, covenant. That's correct. So this is C, isn't it?
Yes.
Question 5C. And we need to answer. So that's correct. So guys, we need to so for ability to pay, I would like to say this, review 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 bank statement, review bank statement for installment evidence, installment payment. This really shows ability to offset loan obligation, because if there is no ability to offset loan obligation, we should expect penalties, we should expect going concern issues. I hope you're understanding that. Then we also need to check the loan covenant. Okay, this is going to give you an idea of potential breaches. Okay, potential breaches. When you breach, when you do not comply with the loan covenants, there is a risk that the loan can be recalled. And if a loan is recalled and you don't have the ability to pay off, you may not be a going concern. Are we together, guys? Yes.
Yeah.
Then check board minutes or management minutes. Okay, for potential, you know, uh, issues on loan management. You understand? Because if the company is having difficulties to pay this loan, it might come out in their meetings. They might mention one or two things. That is, if you're lucky, of course. Yes. So let us remember that. And you can also, review loan classification. What do I mean by this? So a loan is likely to have two components. One that is falling due within 12 months, and another that is falling due for more than 12 months. So there must be proper classification of the components, the sub-components of the loan. Are we together?
Yeah.
Yes. You can also check, there are so many things that you can check. You can also go to the interest calculations. So most of the times companies would rather use the nominal interest rate, but in most cases it is better to use the effective interest rate, because you might be paying more than the interest that is written on paper. It's very important for you to remember what I've just said. Okay. All right, guys. I think we are done with the loan. Where are you going from there?
Inventory.
Yes, stock. Do you want to say anything there on stock? Eh? 5 marks on stock. There are a number of points there. I think this was a nice question, right? On audit
Please
evidence.
repeat your last statement about the loan, sir.
Yes, so the loan must be properly classified. What does that mean? There is a component of the loan that is falling due within 1 year, another component that is falling due for more than 1 year. So proper classification is going to be a necessity. So in this case, you should try to observe that there is a component of the loan that has been recognized under current liabilities, and another component that has been recognized under non-current liabilities. I hope that is a bit clear. Then we said also that you need to recalculate the finance cost. So finance cost is basically interest. So there is a chance that the interest was not correctly calculated. Could have been calculated on the nominal interest rate. When you are paying more, remember that when we go to the bank, they charge us administration fees, they charge us so many things, and in some cases there could be a premium on redemption that is discussed under FR. So you need to exhaust that part as well. So yes. Yeah, so please remember that. Now, can we please answer this quickly, if we can? Are we together? You are ready?
Yes.
So the first thing, and
Yes.
you can, for stock, you can inspect inventory, isn't it?
Yes.
What are you doing there? Existence, right? Then
Yes.
you can also obtain inventory count instructions. Are we together, guys? This helps you
Yes.
to check on completeness, because certain stock is very sensitive. You can't just count it. Like when you go to the bank, there's a way in which they count the money. When you go to these manufacturing companies, you can't reach all the stock. You can't see all the stock. but there's a way in which they count. Think about FRA, those bags of mini meal. There's a way in which those bags are counted. So you need to remember that. Then you can recalculate for accuracy. You understand, right? Recalculate
Yes.
the units and values of stock, isn't it? Yes. Can recalculate. Yes. I hope it is clear. Then also you can check the post-year end selling prices, right? Selling prices for stock. Why are we doing this? You remember, stock must be valued at what? The lower of what?
Lower of cost.
Yes.
Lower of cost and NRV.
Yes. That's correct. So there we go. Remember, and we are talking about valuation here. Yes, and also check. I think I should be on the 5th point now. Check the treatment of damages and write-offs and obsolete, right? Obsolete stock. Obsolete stock. What is obsolete stock? Obsolete stock must not carry the same value as, again, we're talking about valuation there, as good condition stock. Are we together, guys? Yes.
Yes.
All right, guys. So, what about the next one? I think I'm almost done. This is now the issue of the loan now. I think I'm almost done. Yes. This is what? Question 5. D1. No, D what? D2, right? Negative confirmation. When do you use this? So remember, there is positive and negative what? Confirmation. Now, in a positive confirmation, you want the respondent to give an answer. In a positive confirmation, the respondent gives an answer whether they dispute with the figure that you have put on your letter, okay, of confirmation. In this case, the respondents are the clients or the customers of your client. So they will have to confirm whether they agree or not. They will need to make written confirmation. But in a negative confirmation, they will only confirm if they dispute the amount. So the examiner is asking, when do we use a negative confirmation? So once again, confirmation here, you are either writing, okay, or verbally communicating with the clients of your client to find out if it is true that they owe the client. The other word for confirmation is secularization in audit. Did you understand that background that I've just tried to explain?
Yes.
Okay, so read more on that because sometimes examiners may ask a question. Okay, so allow me to say, when do you use when do you use negative secularization or confirmation? When the client is judged to have strong internal controls or effective internal controls. Okay. Also, when objections are likely to be low. You understand? When you have judged, when you have concluded that objections are likely to be low, because for instance, there are some clients who have got very good systems. You understand? They have got good systems, so you find that there'll be fewer cases where you're going to have objections. Then when you anticipate good feedback from or strong feedback from respondents, if you think that the respondents are going to give you the cooperation required, then you can still use that. And then you can use this if there's what we call a lower risk of material misstatement. Material misstatement. In this case, there's a possibility that you're dealing with a client who deals in more cash sales compared to credit sales. So the balance on the receivables is less. Okay? So you feel that this is not going to give us problems in terms of material misstatement. Okay, guys, I just noticed that there is a part what? Part E, right? Is there part E, guys? No. There's no part E, right? Right?
No.
This is the end, right? All right, guys, congratulations. And is there any questions from your end? Is there any questions from your end, guys? Do you have any question from your end?
None from me. It was very helpful.
All right, thank you and all the best. So I think now you should start thinking that you're going to pass. Yeah, I am sure that with the information that we have been able to receive, we should be able to succeed.